Let's get stock specific now. Moltek Packaging reported an operationally good quarter, recorded a healthy volume growth on a year-on-year basis, up 8%, with its margin expanding by about 140 basis points. But the revenues grew just about 4%. What is the outlook on realizations? Are they seeing pressure? What's the demand looking like? And what are the pricing trends as well? To discuss this, we have Lakshman J. Rao, the chairman and MD of Moltek Packaging, joining us now. Welcome to the show and thank you so much for joining us. That exactly is my first question. While the bottom line and the operational performance really looks good, your volume growth has been higher by 8% as well. The revenue growth is just 4%. Can you explain what happened here? Are realizations under pressure? What is the pricing scenario looking like?
No, actually, you are talking about the Q4 growth is 8%, but I'm very happy that in this year we have recorded an excellent growth of 16.5% overall in terms of volume. Your revenues and volumes, you can't compare because the raw material prices vary a lot. For example, last year, average raw material price was 120, 125, and this year it is close to 110. So the volume numbers are the base which we always compare and try to improve upon. So I'm very glad that one of the record years of growth we got in this year by 16.3% top line growth, which is well supported by PAT growth of 26.5%. So revenue numbers are misleading because they depend on raw material prices, based on which we change our pricing to our clients on a monthly basis.
So for the full year, while your volume growth is up 16.5%, that growth number has moderated in Q4 and come in at 8% volume growth. So have things slowed down on any front, and what is the expected volume growth in FY24? I know you've given a 3-year volume growth picture, but particularly for the near term, what is the volume growth we should expect?
Yeah, the volume growth in Q4 would have been better, but for rains all over and ice cream business has not taken off as it used to be last year, especially when there was a COVID clearance. Last year there was a huge rush for ice cream and dairy products, which resulted in huge jump in our food and FMCG products. So on the bigger base, an 8% jump this year is reasonably good. But going forward, we have many other products being added, and our new plants at Sultanpur, Hyderabad, and 3 plants for ABG, that is at Panipat, Cheyur, and Mahad, and 1 plant at Daman for food products. Will be starting production towards the 3rd and 4th quarter of the next financial year. So we are very confident of maintaining 15 to 20% volume growth for the next 3 years because our pharma division at Sultanpur, which is going to start hopefully in the second half or early second half of this year, that is 23-24, will start contributing handsomely from next year onwards. So we have plans and we have investments that have been put up which will sustain that growth.
Are you being conservative here with the volume growth guidance because you're talking about new projects coming up? The paints division as well, which is a big contributor, has been seeing some sluggish demand, but you expect that to do better as well. So is 15 to 20% on the lower side?
Yeah, if, as you correctly pointed out, if the paint segment, which is a little sluggish this year for us, if it start improving and thanks to the new additions of the new client who is coming in a big way, hopefully those numbers, if they help us, we could see better than that estimate, but we'd like to stay conservative.
Okay. And with respect to the new plants that are coming up, I specifically wanted to ask you about your pharma IBM project. That is going to be a big contributor for you as well. What is the EBITDA per kg that you're expecting here? Will it be a higher margin product? And if that happens, how will your margin profile change going forward?
Yeah, I've been talking to various media that pharma containers, various products, not necessarily the tablet containers, but there are different desiccants and other products which contribute much higher EBITDA than our current average of 40, 41. It is almost triple, like 120 to 150 is the EBITDA margin in those products. It requires a very controlled atmosphere for manufacturing, very high-end skills to give quality, which Moltek has in its past 35 years of experience, and also added strong hands in the both quality control side and an operational side. And the team is all going ahead to start products from July, August this year. But as I told, there is a little longer waiting period for client clearances for some of the products. So you will see pharma contributing handsomely from 24-25 onwards, though there will be some numbers in this current year.
Okay. But the big growth, pharma being a big growth driver, will happen only in FY25. Sir, up until now, over the last couple of quarters, what we've seen is that the paints business has been a bit wobbly, the volumes there. They declined in Q3, but they've recovered in Q4. F&F has been growing very fast for you, the FMCG business, while lubricants has been steady. Just over the next 2 quarters, the near term, can you tell us what is the expected volume growth for all these 3 segments?
Yeah, we are anticipating the paint demand to start recovering because it's a season for them. The first and second quarters are typically paint seasons before Diwali. So we hope that this should cross the double digit, which has been sluggish in the last year for us. But going forward, food and FMCG is the area where we still expect 30+% growth in that segment. And lubricants will remain in single or high single digit or close to 10 to 12% this year, which was 30% last year because we acquired a lot of DEF business of lubricant companies, which might stabilize in this year. But still we have growth coming through our QR coded containers and more IML adoption in the lube industry. So hopefully it will give us anywhere between 12 to 15% rise in this year. So overall put together, given the higher volume of paint business still continue to be close to 48-49%, we are aiming between 15 and 20%. But going forward with pharma coming in, probably we can aim closer to 20 or even 20 plus.
So your EBITDA per kg this quarter has been around 39 rupees per kg, which is of course an increase on a YOY basis. What is a sustainable number here for you?
Yeah, this quarter, if you notice, we crossed 40.2 or 40.1 is per kg compared to 39.1 last year. So there is a little recovery in the margins, and we are also taking up various price cost saving measures, and also some of the high-end products are being introduced very soon. And hopefully we will be targeting between 40 to 42, most probably 41 is a probable number in this year. But going forward with pharma coming in handsomely, that number can go up to 42, 43 level.
Okay, all right. And on capex, the capex in FY23 was at 150 crore rupees, which is equal to the last 3 cumulative financial years. Is the majority of your capex over, or will FY24 will also see some investment?
We will be having almost similar capex in this year also, because all 3 plants for ABG have to be set up. We have planted Daman coming up. We acquired land already. Sandila, we acquired land. And Sultanpur, we only completed the food and FMCG commissioning in the last week of March. But the main pharma division is going to be launched, inaugurated sometime in June, July, August. So there's a huge capex going on this year also. I think it should be in the same range as last year. And in fact, to put it in a perspective, last 4 years, a company has invested as much as we did in the previous 32 years. So that's a kind of investment, and this year also no difference. We need to have the presence of food and FMCG in North and West. So we are setting up Daman 2 and Panipat plants along with ABG. We are also setting up manufacturing of food and FMCG products out there. So that will give us a market reach both in West and North for food and FMCG.
Mr. Rao, we'll leave it at that. Thank you very much for joining in. That is Moltech Packaging for you.